Join us for a discussion of Eugene Mitchell's book, Closing the Racial Wealth Gap. Today, we look at life insurance as an investment, not a bill. We open our minds to our current responsibilities and our ability to cover what we have made ourselves responsible for. Use the hashtag PastorJD03 or JD03 podcast to participate in today's discussion. And now, our podcast. I want to start off by asking, how many of you actually have a life insurance policy? I want to know about this because this is one of the things that Eugene Mitchell presents as one of the things that prevents us from closing the wealth gap. Now, you'll know in the last discussion that we had, I shared with you that there was a gentleman that came to our church who talked about life insurance. And when he came, he actually talked about the Asian community. Now, we can't throw a blanket over everybody, so let's not assume that every Asian family is doing this. That'd be foolish. But what he does say is that there was a group of Asians that he was looking at, that he was helping, and that he saw one of their game plans. And their game plan heavily revolved around life insurance. And so what they would do is they would pick out the matriarch or the patriarch, or possibly even both, and the siblings or the grandchildren would then take out a life insurance policy on this elder statesman of the family. And their perspective was that they could split the cost of the insurance policy, which would make a life insurance policy a lot more affordable. And I know that's very important, brothers and sisters, because if you do decide to do this, you have to understand that taking out a policy on an aging member of a family is going to be difficult because of their age and probably because of the health concerns that they might have developed over a period of years. I don't know. But whatever it is, it will be challenging. So the premium on that policy is probably going to be a little weightier than what the average family can afford. So what this family was doing is they took the policy and the siblings divided the policy amongst the siblings, right? And so something that was going to be $100 or $200 a month now divided into fours or five could be now $50 a month or $60 a month. And now this becomes a lot more affordable. And this policy, if it was weighted at, I don't know, I'm not an insurance agent, people, so I'm just throwing out ideas. But let's say that the policy was worth $1 million or the policy was worth $500,000. Then when that elder statesman does pass, not only would you have money to send them off like they want to do, you know, blinging and gold. Y'all know we going out in style. I'm being silly, really. You can send grandma off like she wants to be sent off, but in turn, grandma would then be leaving behind a legacy, leaving behind resources that can now impact her family beyond the grave, people. And so these family members did this, and the way they looked at it was not just of how it would affect them with the person's departure, because sometimes they leave the house unpaid, car unpaid, they leave a business to the family, but maybe they didn't manage the money as well as they should, or the business maybe it kind of tapered off towards the end because they didn't have enough time or energy to put into it, give it the attention that it needed to really be able to thrive. And so now you have a business that is existing but not thriving. So the money left behind now can go back into making sure that the business that grandma or grandpa started can be a thriving enterprise that can now be able to help the next generation not just sustain their business, but to take their business to the next level, thus extending their legacy. Now, the other way they looked at this policy was not as a way just to extend grandma's legacy or to sustain grandpa's business, but they looked at these policies also as a backdrop to what they were doing, right? So the way he put it is that he was looking at $1 million life insurance policy So his explanation was that they would take out this $1 million life insurance policy and divide it between 4 siblings. That's $250,000. Well, so what he was sharing with us is that the average family could literally reset their lives if they had an influx of $250,000. That's $250,000. It's enough to at least pay off the house and to make the money that you have coming into your pockets now. It belongs to you. Now your mortgage is paid. So some of you, if your mortgage is paid, you'd have $1,500 back in your account, $1,200 back in your account. Some of you would have $2,000 back in your account. And so now it shifts your entire position on what you're able to accomplish, right? Now, the other thing that he talked about was businesses. They used it as a backdrop for their own businesses, because you can start a business and take out a business loan if you know that on down the line there is an influx of cash that can help you either build and sustain that business, or to help you recover any losses that you might incur because of that business. I don't know about you, but I've owned a franchise before. I took out a $20,000 loan, got it all the way down to $4,200, and yeah, I was a little engine that could, but I didn't, right? And so then all of a sudden on my credit report, I have $4,200 left that I have to deal with. And so what he's saying is, look, if you have this influx of cash going on, you understand at some point you're going to get an influx of money that's going to help you clear up anything that might be on your credit report, or that you might be struggling to maintain or struggling to build. And so now you feel more confident in taking risk with your own endeavors, understanding that if a business does possibly fail, and sometimes businesses do fail, brothers and sisters, you will have an influx of cash coming in to help you to restore the viability, the financial viability of your family. So he's saying, look, this is what was presented, and I wanted to know if you, brothers and sisters, have a life insurance policy, and if you do, holla at your boy, man. Tell me what your perspective is on why you have this policy. What is your strategy? What is your goal? What was your idea? What led you to actually go and get this life insurance policy? I want to hear from you. Go ahead and share with me, if you will. All right, I'm looking through our chat because I do want, thank you for joining us on Instagram. Please, if you got a question, go ahead and share. Y'all know I will talk. But at the same token, I really do want to hear from you, because we need to have you join this dialogue so that you can impact this discussion. Because there are a lot of different schools of thoughts on why people get life insurance policies, and what people's perspective is on the life insurance policy. One of the things that he wants us to understand is how you can strategically use this to also keep your credit clean. This is something that is not often talked about, but if you get a policy, that policy is going to incur some type of cash value, right? It will build, not incur, but it'll build cash value. And in a pinch, I know some of you might do this. I got this insight from my boy, Joe Wade. Happy birthday to you. I'm gonna holler at you later, by the way. And he's the one that first talked to me about taking out a loan, possibly even against your 401k, so that you can pay it back at a lower interest rate, and the interest that you're paying back now belongs to you. And because you have the lower interest rate, you're able to have a lower payment, which now helps you to be able to negotiate. Now, that's only in emergencies, party people. This is not because you want to go buy some shoes, or you want to go floss, or you want to go to Hawaii with your girlfriends, or hang out with your boys. No. We talking about major family emergencies. My business is on the brink of failing, or some major type of happening with your home that you need to avoid, some kind of major repair that, if not handled, could possibly destroy the entire investment. And so these are major things that you would need to look at, but you can do the same thing also with this life insurance policy. As it's accumulating wealth, you can borrow from it, and then it serves as a way also to help protect your credit, and it gives you the lower interest rate that you need to be able to negotiate and to navigate your current situation, so that you can keep your family flexible and financially viable. All right. So holler at me if you have a life insurance policy. I'd love to hear not all of the details about how much you got on your life and all that kind of jazz, but why did you get that life insurance policy? What was your strategy? Did you get enough to pay out the whole shebang, or did you just get one that said, hey, look, when I die, I want them to buy the flyest suit. I want them to buy the flyest casket. I want to be in some jerseys. I want to have myself looking good, smelling good. Need to be in the finest of colognes and the finest of threads. Like, what was your actual strategy behind getting this life insurance policy? Were you thinking about your kids? Were you thinking about your spouse? Were you thinking about your business? Right? What was your strategy? And how have you adjusted that strategy as you have gotten older? One of the things that we talked about last week was the whole versus the term. I'd also love to know whether you bought a whole policy or a term policy. Do you have any regrets? Are you going to adjust your strategy? And are you going to load up? I mean, some of us are still pretty decent in health, have some pretty good finances. Are you planning to possibly get more life insurance to be able to cover some existing gaps that now exist now that you have begun to acquire more? Remember, brothers and sisters, you begin to acquire and accumulate more as you stay in your profession, as you are diligent, and as you are a good steward. So as you do these things, there might be more that you need to cover because the next generation is going to inherit that entire piece. And if it has not been, if you have not been able to bring those balances to zero, to where you are debt free, then the amount of life insurance that you have is going to help maybe keep that house or keep the property in the family name, or it might be the difference between them taking that for sale sign, and putting it in the yard and saying, hey, he should have done a better job, she should have done a better job, and we would have kept it in the family. So tell me, what was your strategy? What did you do? How are you approaching it from this point forward? Do you need to make some adjustments, or are you pretty firm with where you are? One of the things that Elder Dugas talked about on one of the meetings that we had as elders this morning was how you need to adjust your strategy. I do know this for a fact. When I owned my franchise, I had what was called a key man policy. That key man policy was $1 million worth of life insurance. And trust me, I slept with one eye open. I was like, where this girl at? I tried to keep her happy. Woo-hoo! I had $1 million policy over my life, and I was looking around like, man, I hope she ain't mad. But anyways, you got this policy, right? And it was great because that policy literally could cover everything I had within the blink of an eye if something were to happen to me. Well, I don't own that franchise anymore, and I don't have that key man policy anymore. So now the things that were all covered with one policy, now there are some gaps. So now there's a strategy that you have to adjust and say, you know what? I no longer have the insurance that I have for my business. Now, when I was employed, they offered a policy. And so now that you're not working in corporate America anymore, now that you don't own that franchise anymore, now that you don't have that policy anymore, now you look at the landscape of what you have, and now you discover there are some gaps that I need to fill. Now, back to the drawing board. I need to look back at my plan and adjust my strategy. And yes, I need to be about that business because God has called me to be a good steward over what I have. And being a good steward is not just about acquiring things, because that's what we want to think. I bought some stuff, and so I got the stuff in my house, and so God has blessed me because I own some things, and God is saying, no. I want you to be diligent with the things that you have, and part of stewardship is being able to take care of the things that you have put your name on as an obligatory person, right? So you are obligated now to take care of the things that you have taken and put your name on to be responsible for. So you have to make sure it's not the next generation's responsibility to figure out how to pay off your debts and to deal with the things that you have accumulated. It is your responsibility to position the next generation so that they might be able to take the things that you have built and that you have acquired with ease, and they can build on top of it, hence closing the wealth gap and then making the next generation a viable and a powerful economic entity in this society. Thank you for joining us for today's podcast. Next week, we continue our discussion on wealth by looking at you as an individual or an estate. What does it mean to be an estate? What will happen to the things you leave uncovered? Are you leaving your family vulnerable? Join us next week for a great discussion. Hey, I want to hear from you. Use the hashtag PastorJD03 and JD03 Podcast to join the discussion. I'm Johnny Ogletree III, and I look forward to speaking with you next week on Pastor JD03, the podcast.